Blockchain technology and cryptocurrencies have created a new type of virtual asset, NFTs, which are unique, completely digital pieces of content that exist on the blockchain as numbers made by. How did the $40 billion market for NFTs develop? What is the future of digital collectibles, and how big could it get in 2021? In 2021, buyers spent almost as much on virtual collectibles as traditional art. It was a breakout year, when enthusiasts spent roughly the same amount on digital goods as they did on real art. At the start of the year, just a few crypto investors were aware of non-fungible tokens, NFTs. However, by the end of the year, over $41 billion had been invested in NFTs, according to current figures. This year saw the NFT market explode from a sub-billion-dollar market. NFTs are essentially digital ownership certificates registered on a blockchain, an immutable record that cannot be changed or tampered with. The tokens are typically created or minted using smart contracts, self-executing contracts written into the code of a blockchain, and can be traded on the secondary market in exchange for cryptocurrency. In many cases, NFTs represent unique digital items created for a specific game or project. In the case of Ludo, a strategy board game that allows players to own their virtual planets and collect rent from other inhabitants, each planet can be owned by one player at a time. The tokens are ERC. The NFT mania exploded into the public in March, when a collage by Beeple sold at Christie's for $69.3 million, becoming the first such sale at the house. NFTs have quickly gone from an art movement to a global marketing tool for companies. From sports and music to even former U.S. First Lady Melania Trump. Corporate players from across the sector, including even Nike and Adidas, have recognized the potential in this concept, which has rapidly evolved into a multi-billion-dollar industry. The NB established its own NFT collection. No other hits included numbered collections of NFTs that went viral, including CryptoPunks and Bored Ape Yacht Club, and which denoted the clubby status of their owners and are used as avatars on social media profiles. The core value is still exclusivity, said Nystrom, noting that expensive collections also offer purchasers access to gated channels on chat platform Discord, and to meetups and parties. They are country club-esque. There is a high barrier to entry, a capital cost, and you are around high net worth and other individuals, he added. In total, $40.9 billion was poured into the Ethereum blockchain contracts that are typically used to create NFTs in the year to December 15, according to Chainalysis, a crypto analytics group. The total would even be higher if it included NFTs minted on other blockchains, such as Solana. By comparison, last year the global art market was worth $50.1 billion, according to figures from UBS and Art Basel. Chainalysis found that NFTs have introduced a huge number of retail investors to the crypto world, with small transactions of under $10,000 accounting for more than 75% of the market. However, it is still dominated by a few major players, or whales. There were 360,000 NFT owners with 2.7 million NFTs between them at any one moment throughout February and November. According to Chainalysis, about 9% of those, or 32,400 wallets, possessed 80% of the market value. According to them, a well-known NFT investor known as Pranksy on Twitter, who began with an investment of $600 in 2017, now has an NFT portfolio worth more than $20 million. They told the Financial Times that they invest in a range of ventures, some of which have a greater daily trading volume and others that are more specialized. Most new NFT collectors on the secondary market have yet to recoup the costs of their purchases. According to an analysis for the NFT by blockchain analysis platform Nansen, where early collectors have benefited from a rise in the price of the NFTs as well as in the cryptocurrency used to trade in them. The unregulated space is also plagued by fraud, scams and market manipulation, especially because the real-world identities of buyers and sellers is difficult, if not impossible, to discover. Analysis by Nansen found $2 million of suspect activity across the CryptoPunk and Bored Ape collections in the 30 days to mid-December. Some NFTs, for example, were sold at a 95% discount to the average sale price, either because of mistakes by buyers and sellers, tax write-offs or some other scam exploiting unskilled users. Researchers have also warned that the market is likely being inflated by wash trading, when a trader takes both sides of a trade in order to give the false impression of demand. You can buy and sell an NFT on a public platform and make it look like there is plenty of interest in the piece when it's just you pushing up the price, said Rüdiger K. Weng, chief executive of Germany-based Weng Fine Art. This happens in the traditional art world too, he said, but added that if a manipulator consigns an artwork to Sotheby's and attempts wash trading, they will have to pay the auction house 25% of the sale, making it a costly enterprise. With NFTs the costs are a fraction of that, he said, referencing the transaction fees, known as gas fees, required to mint or purchase an NFT, which can fluctuate depending on demand. Nevertheless, there are plenty of supporters who believe that the market is maturing and will eventually offer a host of features, such as allowing artists to collect royalties in perpetuity. What can you do because it's software? Asked Benedict Evans, an independent technology analyst and a former venture capitalist. That might be things like the artist gets a share and subsequent secondary sales, he said, pointing to early innovations in the space around music rights in particular. Already, in certain communities, the financialization of NFTs is occurring. For example, using NFTs as collateral for loans or splitting up a single piece into smaller parts known as fractionalization. In the distant future, fans anticipate that NFTs will power e-commerce in any metaverse or metaverses. A possible future virtual avatar-filled digital world. In this case, NFTs might represent ownership of virtual items such as clothing for digital avatars or art for the walls of their virtual houses. Nike has purchased a virtual shoe. In the long run, whether or not regulation turns out to be a friend to NFTs is still an open question. Whether they are centralized or decentralized, the future of the NFT market will also be determined by regulators' attitudes toward it. There are concerns that certain characteristics of NFTs and digital investment vehicles could make them securities under regulations. Meanwhile, the Internal Revenue Service has yet to address NFTs directly. But some experts believe they may be classified as collectibles, which would result in profits taxes. It's a major issue for the whole sector, said Pratin Vallabhaneni of impending regulation. Is it a security? How will you tax it? I don't think these questions have been addressed yet.